So when you open your chart, what's the first thing you do? You go to your higher time frame of 4 hours, right?
Yes.
Then we identify the trend of the market. So from this, what's the trend of the market? We're having higher highs, right?
Yes.
Then higher high, higher low, higher high, higher low, higher high, higher low, and then higher high. And then what do you see? Market change direction to a downtrend. You can see from here, you are seeing down here is what is a downtrend. Because market broke this recent low you are seeing. You can see this is a low, right? This is a swing low. Market broke this low to the downside. Then it's a swing low. Then we call it what? A change of character.
Okay.
And then all these ones you are seeing now, what? They are break of structure to the upside, right?
Yes.
Break of structure, break of structure. And then we have what? A change of character. And then after the change of character, we're having a downtrend. Because the market is coming down, giving us series of what? Series of lower lows, lower low, lower high, lower low, lower high, and then we are looking for a lower low now that is lower than this low you are seeing. So one thing with market is that market does not go in a linear way. Market doesn't just go like this. No. That's not how the market moves. Market go give us higher highs, higher low. It will go up, then retrace back. It will go up, then retrace back, go up, then retrace back, then go up, then retrace back, giving us the series of what? Higher highs that I was talking about, giving us swings, swing, higher high, higher low, or swing low, higher high or swing high, higher low or swing low, higher high, and then or swing high, then higher low or swing low. So that's how markets move. You can't see markets as a linear motion or something straight. No, that's not how market moves. Market moves, if it is uptrend, you see what? Higher highs, higher lows, higher highs, higher lows. But if it is downtrend, you see what? Lower lows, lower highs, lower lows, lower highs, lower low, lower high, lower low, lower high, lower low, lower high, and then lower low. That's how market moves. Market does not go in a what? In a straight line. So this is how market moves. So from here now, we've identified that currently the market is what? Is in a downtrend. Because markets change what? Character from bullish, breaking from this recent structure you are seeing. We have this what? Break of structure, this recent break of structure, right? And then we have, instead of market to give us what? A lower low, market gave us what? Market came back and broke this low you are seeing and is now going downward, meaning what? Market has changed direction. This is a low. Market is supposed to give us something like lower high, lower low, and then give us something higher than this lower high. But instead, what do you see market did? Market came down. That has to tell you that market has what? Changed direction. I should what? Begin to look for opportunity to sell. When you see a downtrend, what do? You should look for opportunity to what? To sell the market. It's either you what? Look for your supply zones. If the market is downtrend, you look for your supply zones. If the market is what? Uptrend, you look for your what? You look for your demand zones. And how do you identify your supply zones? Supply zones are, let's say for example, we have something like this. Now, I've told you what an imbalance is. I don't know if you remember. I said an imbalance is a huge movement or a huge candlestick. Let's say, for example, I'm just citing an example for you. Let's say
So I hope you are recording.
yes, I'm recording. Let's say we have something like this, and this is our what? Our imbalance. Imbalance mean a huge move. When you see a huge candlestick that is very long, or maybe you see a gap, or maybe candlesticks are moving in the same direction and they just keep on moving and leaving a gap, that's what we call what? An imbalance or inefficiency. Why do we call it that? Market has to come back to fill that gap. Market, it is a mistake, because market cannot just leave a gap. Market has to come back to fill that same gap. That's what we mean by what? An imbalance or inefficiency. Market has to come back to fill it. Now, let's say this example, we have this candlestick and we have this candlestick you are seeing. And we have this our imbalance, this blue, that's the big move or huge candlestick. Now, let's say this is an uptrend, the market is going up, right? How do we identify our demand zone? Our demand zone will be the what? The extreme candlestick that has what? That has a fair value gap. If you remember from what I said for a demand zone to be valid, it has to have what? Several things. There must be what? An imbalance. There must be an imbalance. It must break a structure, right? Break of structure, that's BOS. And there must be what? A fair value gap. Those three things has to be present for you to consider a block as a demand block or an order block or a demand zone. They're all the same thing. Your demand zone is the same thing as your order block, because that's the candlestick you are using as your order block. So if you look at this one now, to identify your order block, since this is a bullish market and this is the recent candlestick that has all these, all these features I'm talking about, it has a fair value gap, it has what? An imbalance, and then it broke a structure. Let's assume it broke a structure. We have a break of structure under this. I'll show you on a live chart. It has a break of structure. Then what do? We then mark this candlestick from the week high to the week low as our what? As our order block. Since it is an uptrend, we call it what? A demand zone. We then mark it from week to week. We then call it what? A demand zone. So that's how you identify an order block, right? On an uptrend. If it is a downtrend, it's still the same thing. In a downtrend, you look for your what? Your supply zone. In an uptrend, you look for what? A demand zone. Now let me go to a live chart. From here, since I said we're now in a downtrend, right? We had a change of character to the downside. What are we looking for? We are looking for what? A supply zone. A supply zone is just like your resistance level. Resistance level is just like a ceiling, something above. And then a support level is just like your floor, supporting what? Supporting price. So for we to call a level a support, or either a resistance level or supply zone or demand zone or what? Or a support level, price has to reject at that level at least 2 times. 1, 2. Now, if you observe, price rejected the level here 1, now rejected the level here again 2, right? That's what we now consider it as what? Because price is kind of like respecting this level. It couldn't go above it. It can't break above it, and it's trying to respect the level. Then we call this level what? A resistance level. And here, price is respecting this floor level. Then we call it what? A support level, because price tested it like 3 times, 1, 2, and then 3. So we call it what? A support level. But if you are using the SMC concept, we call it what? We call it a demand zone, and what? A supply zone. Now let me go back to the chart. Since I said we are in a downtrend, what are we looking for? We are looking for a supply zone. In a downtrend, you look for opportunity to sell the market. In an uptrend, you look for opportunity to buy the market. So let's say this one now, we are in a downtrend. Let's look for a supply zone that meets all our requirements. It must have a what? A huge move. It must have an imbalance, and it must have what? It must have, there must be a break of structure, and there must be what? And there must be a fair value gap. Now, from what I'm looking at, I'm already seeing my supply zone from here that meets all the requirements. Here we don't have a supply zone. This one don't have a fair value gap. It has, but there is what we call a mitigation. If, let's say, for example, you can see this candlestick you are seeing is a supply zone, right? Because it meets our requirements, it has what? A fair value gap. But it's very, you can't actually see it clearly. But if you zoom out, and an imbalance, this red candlestick you are seeing is an imbalance. And you can see now this red one here is our what? Is our supply zone or order block. Because the adjacent candlestick and this candlestick, you can see there is a gap between it. And what you see, there is a change of character or break of structure. There is a change of character. So we assume this one to be our supply zone. But now, I want to take note of something. You can see this green candlestick you are seeing. It came and what? And break and tested this level before coming down. I told you, if you see an imbalance and a fair value gap, price must always come back to that same level before going towards the intended direction. That's to tell you there is an imbalance, and price must always come back to correct that. So this green candle you are seeing that came all the way up and spiked down and spiked up and came down is just to correct this gap you are seeing, this imbalance you are seeing. That's the reason why you are seeing this spike before price begin to fall. So that's the essence why I'm telling you that you need to identify your supply zone. There must be a fair value gap or an imbalance. Then take note of that level, because price will always come back to that level. Fill that gap before going downwards, before going towards the intended direction. Now you can see this one. Now this one is already filled. This price has already come back to this level and fill this gap we are seeing. You can see price has already filled it, giving us a spike before going down. So we now consider this one as what? A mitigated level or efficient level. It is already mitigated because price has tested it. So we call it what? A mitigated level. It is called what? A mitigated level. Price has already come back and filled the imbalance. So we don't mark this one as our supply zone again. We look for a fresh supply zone instead of looking at this one, because this one is already filled, is already mitigated. So we look for a fresh one. So coming down, do we have another imbalance? This is an imbalance you are seeing. And then I can see this one is an order block or a supply zone, since this is a downtrend. So why did I say it's a supply zone? We have a fair value gap between that candlestick and the adjacent candlestick. You can see this gap. This gap we are seeing is what we call what? A fair value gap, or FVG. A fair value gap or FVG. And then this red long candlestick you are seeing, this red candlestick is what we call what? An imbalance. This red one is what we call an imbalance. And then that candlestick that gave us this gap and the adjacent one. Now this candlestick, we then mark it from the weak high to the weak low as what? As our order block. So that's our order block or our supply zone, since it is in a downtrend. I said in a downtrend, you look for what? Supply zone or your order block. And then in an uptrend, you look for what? A demand zone or an order block. So let me mark it out. So here now is our what? Our order block. You mark it from the weak high to the weak low. But you can see there is a spike, this spike level. In some cases, if you see this spike level, what do? Instead of marking this as your order block, you can mark from what? From the wick of that spike to what? To the wick of the other block. It's still the same thing, just to cover this spike. You can see everything is together. Reason why is because that this spike is covering the other block. So you can, is allowed to mark it from that weak eye and covering the other block. It is allowed. It is allowed. Or if you want, you can decide to what? To mark the spike from the bottom of the spike to the height of the spike. It is also allowed, since it is also covering this our demand block. It is also allowed. Price may come back to test this level to fill this gap. It is also allowed, but I'll prefer I mark it from here, from the spike high to the spike low of the other block. Let me delete the small box, since it is already covering everything. Now, on my 4-hour time frame, I have identified my what? My other block that meets all my requirements. Let me mark out other things. Why did I say this other block is valid? Because there is a break of structure. Now, this is a swing low or lower low. This is a swing low that broke structure. This structure, we have a change of character, but then we have a break of structure to the downside, right? And we then have another break of structure to the downside here. There is also a break of structure here. No, it is not broken yet because price did not break below it. You can see there's what we call fake break of structure. So price has not broke below that level, so we cannot consider it what as a break of structure, because price is still what? Is still below, is still above this level. So we cannot call it a break of structure yet until we see what? Price come below it. That's when we can say the structure is broken. But now price is still above it, still above this swing you are seeing, this swing low you are seeing. So, but this one is a valid break of structure. Why? Reason is that price came below it. You can see price broke here. You can see price broke it to the downside. So it's a valid break of structure. So our other block is valid. It meets all our requirements. It has what? A break of structure. You can see this is the other block. There is a break of structure, and this is our fair value gap here. From here to here is a fair value gap, and this is our imbalance, this red candlestick. So this is our what? Our supply zone on the 4-hour time frame. On the 4-hour time frame. So we've identified our supply zone. We said the market is downtrend. Temporary downtrend is downtrend because it changed direction from what? From bullish. From this bullish, we're having break of structure, break of structure, break of structure, and then we saw a change of character to the downside. Then market is what? Is trending down. So we've identified our supply zone on our 4-hour time frame. Now let me delete these things. So what do? We wait for price to come back. You can see price is already coming back. We wait for price to come back to this our supply zone, right? Tap into the supply zone. Then we will look for our confirmation. I'll show you that. I'll explain that. Look for confirmation that price is about to come down. Then we take our entry from there and what? Look for opportunity to sell from this level, because this is an imbalance to sell. Price has to fill this gap before it continues downward. But we have to see some confluences that price is what? About to come down before we can take ourselves. Now let me explain further. Let's go on. Now we've identified our supply zone on the 4-hour time frame. Let's go to our 2-hour time frame. If we can find any other supply zone on our 2-hour time frame. So we can see we are having another supply zone on the 2-hour time frame, but the 4-hour time frame is covering it. You can see this is the 4-hour time frame. This one, this one, this one. So the 4-hour time frame already is covering it. So if you want, you can what? You can adjust the 4-hour time frame, the 4-hour supply zone. You can delete it and adjust it to what? To the 2-hour time frame. You can see this is also a supply zone, right? On the 2-hour time frame. Now we can adjust it if we scale down to 2-hour time frame, we can adjust it to this level. Now we've find out the supply zone on our 2-hour time frame. Now that's that. We don't have any other supply zone on the 2-hour time frame again. Except this one. We are having a very small, tiny supply zone. Hello?
Hello, sir.
I'm listening.
Okay, this supply zone, is it
Yes.
the zone that, like, is it like a period that people buy? I don't understand. Can you define it for me?
Yes, it's like a level. Just like I said, I say other block. Your other block. I said if market is trending downward, you look for what? Your supply zone. But if market is going up, you look for what? Your demand zone. But now, since we said market is in a downtrend, we are looking for our supply zone. Our supply zone is the same thing as our what? As our other block. If you identify your other block, your other block is the same thing as your supply zone. Supply zone is where people sell from. It is always at the top. People sell from there. That's what we call a supply zone. Then demand zone is where people buy from. It is always below. It's always at the bottom. That's where people buy from. That's what we call what? A demand zone. A supply zone is where people sell from, and it's always above. It's the same thing as your other block. Just learn to identify your other block. If you can identify your other block, so if you can identify your other block, then you can identify your supply zone or your demand zone. Supply zone is when market is downtrend. That's where people sell from. Demand zone is when market is an uptrend. That's where people buy from. And I said your supply zone is the same thing as your other block, and your demand zone is the same thing as your other block. It's just a concept. Like, you just have to learn to identify your other block. If you can identify your other block, identify your trend. First thing, know the direction of the trend, know where the market is going. Secondly, then look for your other block on your higher time frame of 4 hours. Identify your other block on the higher time frame of 4 hours according to the trend of the market. Then come down to your 2-hour time frame. Then refine that other block. If you can see clearly another block on your 2 hours and you can see the 4-hour time frame is covering it, if you want to leave that your 4-hour time frame demand zone, you can leave it the way it is. You can leave it, it will still work. But if you want to refine it, you can scale down to, there's what we call a top-down analysis. A top-down analysis happens like, it's just like you analyzing from the higher time frame. That's what I am showing you now. I am analyzing from 4 hours, using 4 hours to identify my trend, then using 2 hours to refine my findings, to look for to refine what I am finding. Then I will scale down to lower time frame to look for my entry points. That's what we call a top-down analysis. That's what I am showing you now. A top-down analysis is what you analyze from your higher time frame, then be coming down to your lower time frame, refining your approach, you look for what? Your entry. That's what we call what? A top-down analysis. Now, I said your supply zone is where people sell from. It's more of like, it's the same thing as your other block. If you can identify your other block, identify your trend. First, know your trend. If the trend is going upward, then you look for your demand zone. If it is coming downward, you look for what? Your supply zone. And they are the same thing as as your other block.
It says
Are you getting
supply
it?
zone.
Yes.
Supply zone is the same thing as bullish,
As
bullish.
bearish. I said that's where people sell from.
Okay, bearish. That is
Yes.
when people sell or buy.
Is people sell from there is the level people sell from.
Okay, and now what is confusing is, now at that time, share this will be low, right?
What will be
The
low?
price will be low.
No, don't confuse yourself. Like, it's not like you are. Oh, how should I even explain this to you? Price. No, don't associate yourself with price. Forget about price. Market you are seeing. Will the market you are seeing markets like, it's just like markets are like psychological level. There are levels. All these things you are seeing is not price. Forget about those things. People use these levels to buy and sell. And that's what I'm trying to show you. Like, there are levels people use. Okay, when price gets to certain level, people begin to sell. And when price gets to a certain level, people begin to buy. So it's not like you are selling. How should I even put it? Don't bother about whether price is high or price is low. No, forget about it. Are you getting it?
Okay.
Yes, don't put your mind, don't fixate your mind on whether price is low or price is high. No. Don't forget about that. This market is more of like, but how should I even put this for you? I want to explain. I don't know if you're getting me. It's not like, it's not something about whether price is low or price is high. But still, on a normal sense, you can see gold. Gold is now selling at, this thing is in dollars. Gold is selling at what? Gold is now currently at $2, $2,974.69. So this black thing you are seeing on my chart, right? That's the price of gold. But when gold can rise from that level to this our demand zone, and that black thing you are seeing now currently at that level, gold is now more expensive. That's 3,126.85. Is now more expensive. But what do you think? People, you'll be think that is not gold is expensive, the price is high. But I told you, price market is all about buying and selling. People don't care about whether price is high or price is low. Now, since this price is high at this level, there are people who want to take profits. They will now begin to sell gold at an expensive level. That's what I'm telling you. That's what I'm trying to explain. Like, since gold is now expensive, it's just like you buying something. You buy at a cheaper price, right? You now wait till when it is expensive, and you now begin to what? Begin to sell. I'm just trying to explain to you, but that's not how it works. When people wait, like, it's just like market is moving on its own. But then people wait for price to reach certain levels before they make decisions. Now, instead, let's say for example, I am an investor, I am a gold investor. Price is currently at 2,000 something, right? It's not very cheap. I know it's not very cheap. There are some people who will be buying gold from this level. They will be buying. So when gold is now expensive at this level, at 3,000 something, they will now begin to sell. Are you getting it? It's just matters of you buying low, then you sell high. Are you getting it? Are you still with me? Hello? Hello? Are you still with me? Fatima?
Yes, sir.
Why are you quiet now? I'm explaining. I don't even know if you get what I'm trying to explain to you. You
I'm
are
together
quiet.
with you, sir.
Okay, I was explaining something. Did you get it?
You were explaining good, like the
Yes,
prices, how markets happen, like how it happens.
I said there are people who currently, you see gold currently, I said is at 2,000 something. There are people who will be
Yes.
buying gold at this level. But when it gets to certain level, let's say for that certain level, that's how markets work. Supply, people think in terms of levels. They don't just think in terms of price. Price doesn't matter. People think in terms of level. Because people with big capitals, that's how they think. They buy at certain level and they sell at certain level. They don't think about whether price is expensive or price is cheap. No. Let's say this is a level, right? There are some people. Let's say this is a level. There are some people that will be buying at this 2,000 something, and they'll buy at this 2,000 something, and they'll now hold on to it until gold is at this level, 3,000 something. Since this is a level, let's say this is our supply zone, this is a level, you now begin to what? You now begin to sell at when price reach here, you now begin to sell. That's what I'm trying to explain to you. Supply zone and demand zone. That's how people think, not in terms of price. Do you get? People think in terms of psychological level. There's what we call psychological level. They think in terms of level. They think in terms of supply and they think in terms of demand, not based on price. Are you getting it? Are you getting it?
Yes, I'm with you.
Okay. So if on a norms, since price, I cannot just say price because price is cheap here. I'll not begin to be buying. What if price is starting to fall deeper? Like what if price decided to, to decrease? It means I'll be losing. So I'll not buy from here. I'll wait till price come to my level because I know people with big capital, they think in terms of level. They will wait for price to come to that level before they will now begin to what? Begin to either sell or buy. That's how people with big money, people with big capital, that's how they think. That's how they see markets. Not based on how cheap is the price. Is the price cheap or is the price expensive? No. Market is based on what? On key levels. The people with big capital, we call them what? We call them smart traders. The smart traders, they don't think in terms of cheapness of the price. No, they think in levels. For example, let's say me, I'm a big investor. I'll say, okay, since market is here, I'm not buying. No, I know market is going downward. I know market is selling based on the trend of the market. So, as a big man with capital, I'll wait for price to come to level where I know other big mans with capital are looking. You see this level? This level is a level of interest because there is what? Because there is a supply zone here. Many smart traders will be high in this level to look for what? To look for their what? Their supply zone. And what do you think these people will do? When price gets here, they will now begin to what? Begin to sell gold. Are you getting it? It's not like they will buy and keep. Market is just imaginary. Are you getting it? Market moves on its own, but still there are people who move the market. But it's not like they don't think in terms of price. They think in terms of level. They will wait for market to come to this level. But still there are some people who will be buying from here, but they have to have their reason. Smart money, they don't just buy anyhow. They look at level where markets come. If markets reach that level, they will buy. If markets reach certain level, they will sell. That's how they think. So this level that I said is called a supply zone. When price come all the way on a lower time frame, you see price doing something, giving us higher high on a lower time frame. Let's say 30 minutes. Higher high, higher low, higher high on a lower time frame. Higher high, higher low, higher high. What do you think price is doing? Price is trying to come to this level. These people are manipulating price to come to their supply zone. And when price gets here, they are the one manipulating the price. When price gets to this level, since price is not expensive and this level, to many smart traders, people with big capital, they are smart, they have big capital, they have big technologies, they are smart people. They wait for price to come to a supply zone. That's the zone. That's your order block. They wait for price to what? Come to this level, tap into this level, then manipulate price around this level, and they'll manipulate price at this level to what? For many retail traders, there are people we call retail traders who are not patient enough, like these smart guys with big money. They are not that patient. So they are not even patient to wait for price to come to this level. So these guys know, they know you are not patient enough. They will wait for price to come to this level. Then they will see if you are patient enough. If you are not patient enough, you have to see the price on that lower time frame is making correction. You have to see a change of character. You see, price was making higher highs, higher lows, and then price broke this recent low, giving us a change of character. You have to see price do that and see price what? Begin to sell. That's when you look for your opportunity to sell and follow the trend. Follow the guys with the big money. We call them the smart traders. They have big capitals and they are the ones moving the market. Not our small money, our $10, our $1,000, and our $10,000. No, our money is very small. They are dealing with millions of dollars, billions of dollars. So we just follow them. We know when they want to buy. We know when they want to sell. They sell at levels at either supply zone, they sell at supply zone, and they buy at demand zones. That's where these zones, I'm telling you, are very important for us, the smart money concept traders, the SMC traders. We have to know how to identify these levels, because these levels will help us to know when these smart traders are about to either buy and about to either sell. Are you getting it? Are you still with me? Hello?
Hello, sir. I'm together with you.
Ah, Lord. I don't like the way you are so quiet, wallahi. I don't like it. If you don't understand, ask me. That's why
No,
it is
sir,
a
if
live
I don't
session.
understand, I'll ask you.
But
You
you are
know
quiet.
what?
I'm asking you. I thought maybe I'm just talking to myself, because you know sometimes network used to log me out and log me in, and when I'm logged out, it will mute me. I don't know. You will just be talking to yourself. So if you see you can't hear what I'm saying, call my attention. Are you getting it?
Yes.
That's why I'm communicating with you. That's why I keep asking you, are you getting it? To know whether you can hear what I'm saying. Are you getting it?
Yes, sir.
Okay, please don't be
I'm
quiet.
together
Please.
with you.
Okay, please don't be quiet. Please. So
Okay.
I said the first thing, you identify your trend on the higher time frame of 4 hours. Then the second thing, you look for your other block. Look for your other block on the 4-hour time frame. Then scale down to 2 hours. There is what we call top-down analysis. You start analyzing from your higher time frame, then coming down to your lower time frame. Now we are on our 2-hour time frame. We've refined our other block on the 4-hour time frame. If you notice, the other block on the 4-hour time frame was covering from this level to this level. Why is it so? Because each candle you are seeing, this candle you are seeing is a 2-hour candlestick. The second one is also a 2-hour candlestick. If you add them together, it will now be what? 4 hours. So each candlestick is 2 hours. But now we are on the 2-hour time frame. We are on the 2-hour time frame now. Now we
Okay.
are on the 2-hour time frame. Yes. So that's why it was covering this candlestick and it was covering this also candlestick. If you had them, this candlestick is 2 hours, this one is 2 hours, making them 4 hours. That's why you were seeing our 4-hour order block was covering everything from here to here. But now we can clearly see on the 2-hour time frame that we can refine. We can also have a order block on our 2-hour time frame. You can see it's very clear, very neat. We can refine it on our 2-hour time frame. But it's still okay if you want to use that your order block from 4 hours. Let me go to 4 hours so that you can understand. You can see this. You can see what I'm saying. When I came back to 2 hours, you can see this week. This was from 2-hour order block I marked out on the 2 hours. But you can see, what did you see? It was from this week low to the week high of this body of this candlestick. That's why I said it is allowed for you to mark from if you are seeing a very long week, you can mark that long week to the bottom of the body of that week. It is allowed because it means there is an order block there. But don't confuse yourself. If you don't want it that way, you can still do it the other way. The more you practice, the more you open this application I'm using, the more you open it and the more you keep on analyzing, you keep on getting better. But if I send you video and you don't watch, and if I send you tutorials and you don't watch, and if I give you assignment and you didn't do it, you realize you're not getting any better. But if you keep on using this application I'm showing you, and if you keep on analyzing, you keep on getting better. Before every class, you keep on getting better. In fact, you just be looking at it and be like, okay, I know this is another block. But if you don't practice and if you don't use it, you not get it. So now, if you observe, let me mark it out on the 2-hour, just to explain to you. You can see this green candlestick. I marked it out on the. You can see this green candlestick. I marked it out on the 2-hour, but from the week high to the week low. This green candlestick. Now, let me change the time frame to 4-hour time frame. What do you see? We're only seeing weeks because that green candlestick is only for 2 hours. But now it is now within this 4-hour candlestick. This candlestick you are seeing is 4-hour candlestick. This thing you are seeing from here to here is 4 hours. Are you getting it? This single candlestick you are seeing is 4 hours. So that's why you are seeing this week. this long wick is highlighted because but on the green, on the 2 hours it was a green candle, but when we came back to 4 hours, it is what this long wick you are seeing is still allowed. That's why I say you can mark from wick of a long body. If you can see a very long wick that is covering your what, that is covering a demand block, we are seeing, you can still like mark the wick from, it's still covering this. You can see it's still covering this one and it's still covering this one. It's still the same thing. But don't confuse yourself. Okay, if you want to mark this green, this our demand block, this demand block you're seeing, if you want to mark it, it is advisable, since you are seeing a long wick that is covering it, you can mark from that high of the wick then to the low of the wick of that demand block. It's still the same thing. It's still the same thing. Now we've gotten our other block on the 4 hour time frame. Let's go to 2 hours. Let's go back to 2 hour time frame to look for other blocks. Now, I don't want to confuse you and I want to make it easier for you. You can mark your other block on the 4 hours and you're okay with it. It's okay. It's completely okay. Are you getting it? It's completely okay. Then you can scale down to 2 hours. If you see any other block that also meets your requirements, you can mark it out. It's still okay. But obviously, we can't see anyone now. We can only see this one here. But you can see the 4 hour other block, this zone you are seeing, this green thing you are seeing is what we call a zone. It's already covering it. It's already is inside this our other block of 4 hour other block here. See this 4 hour, this box is on the 4 hour box. It's from the 4 hours. It is covering this and it's also covering this, meaning this other block on the 2 hours is also what is within this block. So it's still the same thing, and we can't see any clear other block again. So we go to 1 hour time frame to look for any other confluences. We are just doing top-down analysis. It is very interesting to do top-down analysis. So now this level we are seeing is what? There is what we call an inducement. Inducement is for traders who do not have patience. They don't have patience to wait for price, and they are what? They are those who, these smart monies, who are patient enough, they manipulate them, because these guys, these traders, we call them the retail traders, they do not have the patience. So this level is a level of interest. Now, don't worry, I will explain more about it. There is what we call inducement. If you see price is about to tap into this your other block, but instead of tapping into it, it's turned around and is now going otherwise. Some people will now FOMO. There is what we call FOMO, fear of missing out. They will now jump onto this and begin to what? And begin to sell. But what do you see? Smart money, they are very patient enough. They will wait for this zone, for market to come back to this zone. This is our supply zone. They will wait. These guys are very patient and they have big capitals to play around with. They trade with big capitals. They are very, very patient. They will wait for price. Now, people that sell from here, they are not patient enough. They sell from here and price is selling. They are the one that push price to sell. They sell. They sold from here and price is selling. But smart money now, what is smart money now is not playing around with sell. They are not buying. They are not buying. And you will see markets will now what? Begin to come from here to here. It will now be coming up, 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 up. It will now take these guys out and now take their money, because they are not patient enough. They will take their money. That's what we call what? An inducement. And it's also what we call what? Liquidity. There's what we call this. There's this saying we have. If you can't see the liquidity, you are either the liquidity. Know where your liquidity is. If not, smart traders or smart money, they will use you as liquidity. Liquidity is, they will steal your money. They will take money from you because you are not patient enough and you don't even know how to identify your liquidity. They will use you as what? As liquidity. If you can't see liquidity, then you are liquidity. So learn to identify liquidity. I will explain more on where you can see this liquidity. They usually occur around your what? Your other block. Now I said this is our other block and it's our supply zone because we are selling. We are looking for opportunity to sell. So price will come all the way from here and tap into this our supply zone. So when price tap into this our supply zone, we then what? Go to our entry time frame. My entry time frame is what? 30 minutes. I'll go to 30 minutes. I'll then go to 30 minutes. After price, I've tapped into my order block. This is my supply zone. I'll go to 30 minutes. Then wait for confirmations to see whether smart money is about to sell. How do you know smart money is about to sell? Now, since this has already tapped into it, we'll look for what? I have to see that price is coming down. When price comes down, price has to break a structure or change character. If price change direction, there is what we call change of character, right? So if price change character, I'll then look for my order block on the 30-minute time frame again, take my entry from there, and then what? Begin to sell. So let's say on the 30 minutes, I saw a change of character to the downside because price was coming upward temporary. If you are seeing a movement on a lower time frame that is opposite of the trend, the higher time frame trend, we call it a temporary movement. Is because the higher time frame is what you use to identify the trend. Then anything you see doing opposites on lower time frame is just temporary. All those things have to come back and align with your higher time frame. So when I see price change direction on my lower time frame, when price was making higher highs, higher lows, higher highs, and then tap into my order block, and then change direction. I now see that price change direction, change of character, right? I then look for my order block on the 30-minute time frame, right? Wait for price to come back to that my order block again, and then begin to take my shorts. Shorts mean to sell, right? And then set my my SL. You can see this thing. I show you the video I sent to you how to use this thing. You can adjust it. That's your SL. The red one you're seeing, SL. There's what we call the short position, and there's what we call the long position. So if you use the short position, since we are selling, we use the short position. We now adjust our SL and then target our 1:3 risk to reward. It's advisable to always target 1:3. Make sure if you are risking $1, you should be targeting $3. If you are risking $100, you should be targeting $300. That's 1:3 risk. You adjust it to give you 1:3 RR. It will be showing you on the screen. If I tap on it, you can see ratio, risk to reward ratio 3.02. That's your risk to reward. One, it means you are risking $1 to target $3, or it depends on the lot size I'm using. If I'm using lot size to risk $100, if I am to take profits from here to here, I'll be making $300. If I'm risking $1,000, if I'm to take my entry from here and price came down to here and hit my take profits, I'm getting $3,000. But if I'm risking $1,000 and price went to my SL, this red thing hits my SL, I lose that $1,000. And just like that, likewise, are you getting it? Are you still with me? Hello? Okay. All right. So let me look for an example. Let's look for an example and explain what I'm trying to show you. Let's say I'm analyzing from here to here. Let's say I'm analyzing from here to here. I'm analyzing from this blue something. I'm analyzing from there. Now, and I look for my demand zone. Let's say from here. I then look for my demand zone on the 4-hour time frame. Since market is making series of higher highs, we see market making series of higher highs, higher low, higher high, higher low, higher high, higher low, and then higher high. So market is bullish. The market is bullish. So what am I looking for? I'm looking for a demand zone, right? And then my demand zone is the same thing as my order block. Then if you zoom in, if you zoom out, you can see I said there must be a break of structure. Now let me mark it out. I'm already seeing my order block. I'll look for my order block on the 4-hour time frame. You can see I'm seeing this candlestick as my order block. Why? There is a fair value gap. We have a gap here. There's a gap, right? And what is the market came by? I said markets must always fill this gap before it begins to go up or down. It depends on where the market is going. Since this market is what is uptrend, market has to fill this gap. You can see this long wick you're seeing it filled it. I can take my entry from here. So this is my order block. This block you're seeing, because there is what? There is a fair value gap, and this green one is what we call what? An imbalance. And there is what? A break of structure. This structure you're seeing is what? A break of structure here. Break of structure. Now I have identified my order block on the 4-hour time frame, right? Then I'll go to my 2-hour to see whether we have any other order block around there. Well, obviously we don't have anyone. This is our extreme. I prefer taking extreme order blocks because they are always valid. Extreme one meaning very far order blocks, the one that are extreme, that you cannot see any other block again. We take them as our order block. Then I can't see any other block on the 2 hours. Then I go to my what? My 1-hour time frame. Wait for price to come all the way from here, making series of higher highs, higher low, lower highs, lower lows, lower high, lower low, lower high, and then tap into my order block. This zone, this is my demand zone. If price tapped into my demand zone, right, I then go to my my 30 minutes, which is my entry time frame. Then look for change of a change of character for the price, for the movement to be in. Since our trend is an uptrend, is bullish, then we have to see that markets has already changed character to a bullish trend. So we can see this low, this high was broken, meaning we're having a change of character here. Now have a change of character here. Change of character. Then on my 30 minutes, I look for my my order block on the 30-minute time frame. So this is our our order block, this long one, because we have it has a fair value gap, and you can see there's a fair value gap, and then it has an imbalance. This green one is an imbalance. Then I'll mark it out as my order block. But if you observe, market did not tap into our I'll now highlight it on the 30-minute time frame. But then market did not reach my order block. So as an order block trader, I do not have anything here. But there are those who will take their trade from from this fair value gap. There are people who take their trade from a fair value gap, but I don't take trade from there. I have to wait for market to tap into my order block. But you can see remain small for market to tap into my order block to gain my entry. I then set, I didn't market tap into it. I then set my my long position, set my SL just below the just below the order block, and my entry at the the beginning of the order block, and then set my my target to be 1:3 risk to reward. And now let's assume, you can see I didn't price tapped into our order block. You can see we could have take profits around here. Price hit our take profits, right? I don't know if you are still with me. Hello? Okay, so I think we can call it a day from here. Let's just call it a day from here. We'll meet in another class and explain further. Hello?
Hello?
You were
Oh,
logged out.
since me Yahweh wagon me wagon.
I can't see it now. I was in the chats. I was in the chat showing you something now.
Oh, since
Yes.
far because me log out, so me chike join way. So I'll be waving you.
I can't see it. I can't see it. I was in the
Oh,
chat. Yes. So I've
yeah.
ended I will send you the video so that you can go over it. I'll send you the video for the class for today. I'll send you the video.
Okay, I was trying to ask about those entry points, but no, I large entry points one now, and like the by a candlestick. How will you know that this is like a proper point? No, I
Entry
use
point.
as entry now.
You still look for your demand zone or your supply
Okay.
zone. Your other block on the lower time frame will be your entry point. Let me show you something. You can see this is my other block I marked out on my 30 minutes order. This box you are seeing I highlighted is my other block on the 30-minute time frame, right? You can see market eventually came back to that other block and tap into it here, right?
Yeah.
Market came back and tap into it before it begins to what? It begins to buy. So I could have gotten my entry from here. Are you getting it? I could have gotten my entry. I will now set my entry here, my long position here. Oh, network. Oh, shit. So I'll set my position here, set my stop loss here. But the problem is my stop loss will be very huge. That's the thing. So I have to control my risk to reward, my risk management. I have to apply my risk management and then set my target to 1:3. That's above this level. Anywhere above this level. You can see, and price what? What did you see price did? After coming down all the way from here, I now tap into my what? Network. What do you see price did? Price tapped into my demand zone, right? Before it begins to buy. And what do you see? I could have made money on this trade because the lower time frame is now in alignment with our higher time frame. Our higher time frame was what? Was uptrend. But then what do you see? On a temporary note, price turned into a downtrend. Like it came back. It has to come back to our demand zone before, when we see there is the lower time frame is now in alignment with our higher time frame. That's when we can take our entry. We have to see a break of stock, a change of character, and I've already highlighted our change of character on the lower time frame here. Price was in a downtrend. That's a temporary downtrend on the lower time frame. We had a change of character, and then we waited for a price. Price was going up. Some people would have FOMO from here and jump onto the trend to take their trade, but no. You have to be disciplined. You have to be patient enough for price to come back to your level, that your zone, that your other block. You can see, and when price came into our other block, what do you see? Price begin to go with our higher time frame of bullish, which was uptrend. You can see. And what do you see? We could have made money from what? From this trend. Are you with me? So you have to identify your other block on the 30 minutes. That's your lower time frame. But you have to see a change of character, because the price will be opposite, a short-time opposite trend of the higher time frame. It is making that trend to come back to your other block. And when it reaches that your other block, you have to see a change of direction, a confirmation that, okay, price is about to change direction to go with the normal trend. That's when you see your change of character. Then you mark out your other block. I will explain more in our next class on that. So from now, I'll be showing you this constantly, and I want you to go over the video, watch it step by step, get what I'm trying to say before our next class, so that when I come, I'll just be talking, I will just be doing it together, just be highlighting our other blocks, our demand zone, and our supply zone. I get in it. Watch the video from A to Z and use your TradingView app. Open it, practice everything, learn to identify a trend. I will send you the assignments after this class. I'll send you the assignments on what to do.
Okay, sir. So if we jump your son.
Let's meet by 11.
Acha me ga ogayi sister me mom me sa me ba mu late. So touchy.
Okay,
So
I didn't tell you.
okay,
Didn't tell you about it.
oh,
Yes.
na
So
so me lo sadaka Jesu.
so you are free, so I don't know. Let me give you a gap. Then next tomorrow, let's meet then. So that
Okay,
you can
but
have
just give
enough
me
time. You can
something.
have enough time to go over what we did today. Are you getting it?
Okay.
Yes.
But you can like give me something. Let me go through it, switch it together the video now.
Okay,
Just
okay.
give
I'll
me
send you
something.
some assignments.
Okay, sir.
All right. Have a nice day.
You too. Thank you, sir.
All right, good night.
Okay.